Well, as we get you updated on our grain trade, we'll take a look at our quotes provided by Bar Chart, and you might be a little bit surprised from our last update. Let's take a look at what's going on right now, shall we? On the corn, we have kind of turned this thing around here a little bit. We have December corn after being higher earlier this morning. Now we're trolling around near the low of the day. We have the December at 666.5. That's down 4.5 cents. We had been several pennies higher on the open this morning. Now on the soybean trade, November has flipped around and it is down 3 3/4 at 13.79 3/4 after a high of 13.97 1/4 in that overnight trade. Quite a turnaround there. Well, can the wheat market hang on? No, we have Chicago December down 12 1/4 now at 8.32. Boy, something has really spooked this entire grain complex here in the last half hour. 831.5 on December wheat would be down 12 3/4 cents from our close yesterday. In Kansas City, we're down 8 now at 893.5, so we have fallen below that $9 benchmark, and now we're within about 2 cents of our low of the day. Minneapolis spring wheat, December now hanging on to just a penny and a half gain. It's at 901.5, but it has given back about 18.5 cents from its earlier high. And on the cotton market, it's hanging in there with triple-digit gains today. December up 187 points. We're at 103.49 cents per pound. Robin Cross is with StoneX. He's located in Chicago. He's our resident lumber expert. He joins us right now to take a look at what's going on, all things lumber market related, and just wondered if we had any surprises there. How's that market holding up?
Well, good morning, Marlon. No surprises today. You know, it's with the shortened week. I think a lot of guys don't even realize it's already Thursday, present company included. So this morning, let's go through some prices. We got September lumber, 506.30. That's up 80 cents with 34 trades over there. November lumber's coming in at 487.60, up 160 with 72. Well, I guess the market, is what I would say, Marlon, is in full-on expiration mode. September lumber is set to expire Tuesday the 15th, so majority of the trading these last couple of weeks has been completely preoccupied with rolling out of September into the now lead month of November. Open interest in September is only down to 260 cars this morning versus November, which is pretty decent, 2102 for a grand total of 2575. Open interest, though, I just want to make a little comment on that, has definitely picked up. If you remember in July, we were down to the third lowest in history, a dismal 1,700 cars of open interest. But there were several factors this summer on why we lost so much interest. First was the clear uncertainty of the future. With the launch of the new lumber contract in August, it's what we say on the floor, the fear of the unknown. And the upcoming transition literally compelled traders to just get to the sidelines. And then until the transition really began to take shape. And just a sidebar, we're a month to the day on this, and we're all still sitting there at about 25 cars open interest in that new contract. So there's really not much interest there yet. And then the second reason we lost so much open interest, and to me, I would say this is the most important reason, is something I've been warning about literally for 7 months, was the transition from a major record-setting bull market to a now undeniably technical bear market. And since the bull market was so good for so long, it took, what I would consider the savvy traders a lot longer to recognize this transition or shift than they have in the past. The guard would be up, but you get complacent when you see the market up for so many years, basically since the pandemic, that guys, I think they were a bit surprised by the market. And the reason I believe they were surprised is because of the magnitude of the sell-off, right? I mean, it's went a lot lower than even the quote-unquote experts thought it could get. Not here on RFD TV. We thought it was going here all along, good buddy. So the first instinct is always to exit the market in the face of adversity and wait for the dust to settle, which in this case, I believe it has. The lumber market has finally reached like a tradable investment level. I was reading all kinds of our counterparties' bearish, sentiment of all the news reports coming out. But me, and being on the forefront of this, I feel like a lot of that bad news is in the market already, and we've been dealing with it for some time. If anything, I think guys should be more wary of potential mill curtailments, considering we are under the cost of production for them. which would then set the bear trap with the funds having the largest short position in lumber they've had in several years. Currently, I think it's got the right makings for a textbook bear trap. So I'd be careful of that. If you want to sell the market, I'm okay with selling the market. Just wait for some premium. Do not sell a discount in here. And the same token, if you have some, you could cover cash needs out there at, over $100,000 off from just a couple of months ago. Don't mess around. Don't think that you're going to save 20 or 30 or 50 more bucks. Get in now. Just get ahead so your needs are covered and you can just focus on selling the lumber.
Interesting perspectives. Well, thanks for offering all that, Robin. Great information as always, and look forward to our next chat a week from now. Robin Cross of StoneX in Chicago. We'll come back in just a moment. We'll get you updated on our livestock trade next.